Good evening, everyone. A very warm welcome to our National Savings Month webinar. On behalf of Prescient Investment Management, in collaboration with AWIF Women in Focus, thank you for taking the time to join us this evening. So July is National Savings Month, a time dedicated to encouraging everyone to develop healthier financial habits and to take meaningful steps towards that financial security. So our theme this evening is Your Wealth, Your Way. Every woman's financial journey is different, right? We have different responsibilities, different goals, different aspirations and dreams. Yet one thing remains true for all of us. We all deserve the opportunity to build financial confidence and create long-lasting wealth, regardless of where we start from. So tonight we're going to explore practical ways to do exactly that, covering topics such as financial freedom, budgeting, and even looking at the psychology of money. For those I haven't had the pleasure of meeting, my name is Nobukosi Kufa, and I serve as a committee member of AWIF Women in Focus. And it is my pleasure to moderate this evening's discussion. It's now my absolute pleasure to introduce our guest speaker for this evening. Ayanda Hazia is a client director at Prescient Investment Management and an accomplished investment professional with extensive experience across both the traditional asset management and also alternative investments. Throughout her career, she has worked across business development, investment analysis, capital raising, strategic initiatives, stakeholder engagement, and she has expertise spanning from private equity, private debt, infrastructure, and project finance as well. So she's quite a seasoned investment professional, and she's passionate about inclusive economic growth and increasing women's participation in investment opportunities that create both commercial and social impact. Ayanda holds an MBA from Wits Business School and has an executive development certificate from Duke University, a postgraduate diploma from Stellenbosch Business School, and a Bachelor of Economics degree from Rhodes University. So we definitely have the right woman in the room to help us navigate this discussion this evening. Ayanda, welcome. It is wonderful to have you with us this evening.
Absolutely. Thank you, Nobukosi. It's always so weird when you hear someone else describing you, but yes, thank you for that warm welcome.
It's an absolute pleasure. So let's get right into it, Ayanda. Our theme this evening is Your Wealth, Your Way. So before we get into the technical nitty-gritties of investments, I'd like to start on a personal note. When you hear the phrase, your wealth, your way, what does it mean to you personally? And how has that philosophy shaped your own financial journey?
Okay, no, certainly. Thank you. So your wealth, your way. I think for me, what I take from this phrase is rather, what does it mean for me to have my own personalized financial plan? What essentially I make of this is, how do I go about in achieving financial freedom for myself? And what are the steps that I need to do in order to achieve this? Mm-hmm. I guess when I think maybe like one of the few things that I do at the start of each year, which sort of helps me sort of define my financial goals a little bit better, I do what some people would call a manifestation board, and essentially my finances is a subsector into that board. And essentially I'll say, okay, what is my, let's say, my yearly goal for finances? What does that look like? and I sort of break it out quarterly in terms of how do I achieve that. So those are just some of the practical steps that I use in holding myself accountable in achieving my goals.
Oh, wow. That is very intentional. And, um, when we think of vision board, we just think of uh, pasting pretty pictures or collecting, but it's very intentional and gives you direction. And I like the fact that you break it up into quarters as well, which makes the task more achievable, right?
Mm.
So no, that's awesome. So you did mention financial freedom. Financial freedom means different things to different people. So how do you define um financial freedom?
Mm. So I guess for me, financial freedom would essentially mean not having to solely rely on my paycheck and
Mm-hmm.
meeting the needs of my family. Um, so when I don't have to worry about other things like paying a bond, for me, that's another definition of financial freedom in my life.
Mm-hmm.
When I've built enough assets that are income generating, that pay income and dividends, that for me is what I define as financial freedom for me.
Mm. Yeah, that's really awesome. Having assets that actually generate income for you so that you're not dependent on one source of income. And I think that's what a lot of us aspire to do. And also, with financial freedom, it looks different for women at different stages of their lives. And you mentioned family, and I guess when um, before you had family, your own family, you had different goals. So it differs what stage of life you are in.
Sure,
Mm,
sure. Yeah, so I think I think you're 100% right. I mean, earlier on, let's say in my career, when I'd sort of just assumed and started working, that financial freedom early on would have been looked in terms of buying myself assets, maybe like getting myself a car,
mm-hmm.
renting myself a place, managing to save some money from the salary that I get, also starting to save in terms of an emergency fund,
Yeah,
and I think, of course, early on in our careers, many of us, with the help of our workplaces, they've guided us to preserve capital, or rather to preserve money into retirement savings. So I would say earlier on in my life, that's sort of what financial freedom, uh, looked like. And of
mm-hmm.
course, now as I've grown a little bit more in my career and I've assumed more senior roles, financial freedom now looks slightly different. To the extent that now, as we chatted just now, that um, one looks for assets that are income generating. So it's buying that house that, one day in the future you can get rental income from.
Mm-hmm.
Financial freedom means, can I afford, the schools of my preference that my daughter can go to? Can I live
Yeah.
in the neighborhood that I want? So ultimately over time, as you sort of scale up in your career, the financial freedom looks very different for many people. And I suppose maybe for some of our guests on here tonight, for some of those, maybe black tax is a thing. And maybe,
Yeah.
when it comes to a time when they don't have to pay black tax, that would be financial freedom for them.
Mm-hmm. Thanks for that. Thanks for that, Ayanda. And I love the way you always make reference to time. I mean, there's something about us women and long-term financial planning that there is that fact that we do. Stats have shown that women live longer than men. So, um, why is that such an important consideration when planning our finances?
Um, So men are not living longer than men because of some of the new jabs that have come along. Um, I won't mention some of the names, but coming back to the honesty of this conversation, if we're looking at sort of life expectancy, we see that
Mm-hmm.
the life expectancy of women in South Africa is around 70, and men is around 63 years of age. So what essentially this means is that women are living for much longer.
Yeah.
Then women, it means that women need to save for many more years. And
Mm-hmm.
ultimately, women need to be more diligent in terms of how they structure their retirement savings.
Okay.
So with this fact in mind, I would suggest, that women definitely start a lot earlier in their
Mm-hmm.
lives, in planning for living longer, essentially. Um,
Mm-hmm.
and and also what I would also advocate is that they find different sources of alpha
Yeah.
from which they can generate this income to sustain their lives.
Mm-hmm. One of my favorite financial concepts is compound interest because it reminds us that time can be one of our greatest assets. Compound interest is often referred to as one of the most powerful wealth building tools. Can you explain why time is such a critical factor when investing? And what is the cost of delaying saving and investing?
Yeah, so I mean, I suppose I'll probably repeat a line that many of us have heard time and time again.
Mm-hmm.
But essentially, a line which is very true that the longer your money is
Mm-hmm.
invested, the more
Yeah.
time that it has, to grow and generate those returns for you.
Mm-hmm.
So investing for the long term ultimately allows you to take advantage of any sort of market activity and fluctuations that may happen in the market,
Mm-hmm.
because ultimately over time those smoothen out, and then increasing your chances of achieving your financial goals.
Yeah.
So by, essentially, because, starting late, it means that you possibly have to save a little bit more money.
Mm-hmm.
And then if you start late again, you probably have to assume a little bit more risk. And this undoubtedly will put you, under pressure.
Yeah.
Um, in achieving your financial goals. So, and with the added pressure that you're saying that women are living for longer, I mean
Mm-hmm.
that's quite a serious challenge, because I mean if we're looking at South Africa, for example, and I'll bring it back home because most of us are here, is 40% of households in South Africa are run by women. And women essentially before have been on the lower earning spectrum in South Africa. So now we're saying they're living longer. They intuitively probably earning less than their male counterparts. This then
Mm-hmm.
means that they have less disposable income for them to save for their retirement income. Uh, and ultimately, it will then realize them to have less savings. So now women really have to be more intuitive in terms
Mm.
of how are they structuring, their savings, and what else do they need to do, in terms of not just having one source of income, what else can they do to ensure that they have sort of sustainable retirement plans.
Okay. So you mentioned alpha and sources of alpha. What is that relationship between alpha and the risk that we choose to take on?
Yes, ultimately. So essentially in investments, if you take low risk,
Mm-hmm.
low risk would be in instruments which are sort of more cash-like instruments, income-like instruments, and those essentially will give you a yield return. And those are typically lower than your other higher risk asset classes like, equities, or global funds. So essentially, the less amount of risk you take, the
Yeah.
less alpha return you get. And the more you go higher on the risk spectrum, the more likelihood of higher returns. So that is the relationship between the two.
Okay. Thank you for that. So sometimes I know we can be very careful and when we look for and I think that's why it's important to get the right financial advice because when we look, there's so many investment vehicles out there and we want to we want the high returns, we want to make money,
Mm.
but we also don't like the volatility and the risk that comes with it. And from what you are saying is that if you, in the long term, if you're going to make meaningful returns, there will be a bit of risk, some risk that you would take, right?
Absolutely.
Mm.
Absolutely.
Okay, so I under many people believe that they need a significant amount of money before they can start investing.
Mm.
So what would you say to someone who feels they simply cannot afford to start? How small is small when we say start small?
I think what has changed, I mean, I think at the time when I sort of entered into this investment world and when I looked at investment vehicles, I think at the time, for
Mm-hmm.
me, the minimums were around 500 Rand, but over time, those minimums have largely gone down. I mean, people can start as little as 50 Rand.
Wow.
So there's this T vehicles called tax-free savings vehicles,
Okay.
which are available from some platforms, and one can start as little as that. But I think also people must also perhaps look at investment accounts linked to their bank accounts, because the minimums there will also be a little bit more favorable.
Mm-hmm.
I think often what turns people off, they think it's the minimums are too high, therefore
Yeah.
causing restrictions in terms of entries. But I think a lot has changed over time, Noble Course, and I think
Mm-hmm.
there's a lot of opportunities that people can look at. So I'd say start with what you have, start with the little that you have. I mean, don't sit back, take agency of your life and don't be passive when it comes to preparing for your future. Time goes by very quickly. It
Mm-hmm.
truly
It
does.
does. Yeah.
So do not neglect that. Do not negate it to think you've got 30 or 40 years still to come.
Mm-hmm.
It comes very quickly. So I'd say just start with what you have and
Just start. Yeah.
100%.
Okay. Awesome. And then tell me a little bit about the psychology of money, because money is really just about it's not just about the numbers, right? It's also emotional. It's influenced by a lot of things. It's influenced by our upbringing, our experiences, and sometimes even our fears. Um, how do
Mm.
our beliefs and experiences shape the way we manage money?
Mm. Yeah, no, absolutely. I mean, if I look at myself in particular, I mean, when you talk about experiences or beliefs, when I
Mm,
was growing up, I went to boarding school. My parents sent me to boarding school, so I would get, pocket money, for the term or for the
yeah.
month, and essentially I had to, make that pocket money last, and later on to went to varsity, the same thing. Um, so that experience of being given a certain amount of money and being able to handle it for the month essentially also helped me when I started to work, because you get a salary and then the salary must then also sustain you, for the month
Yeah.
until you get your next paycheck. So experiences, without a doubt, definitely do contribute to sort of how you manage your money. Um, and we talk about people must not be, emotional when investing. And I also think this is true because in investing, we've gone through various periods of, downturns in the markets where we've had the financial crisis. We've had COVID. So if anyone had invested money during those periods and then you disinvest because you are worried that you're going to lose everything, those are the periods where one should hold tight and actually not use emotions, but just remember what is the plan. So it's very important to remember what your plan is and to
Yeah.
stick to it and not to be driven by emotions. So yeah, so when I think of belief and emotions, those are some of the examples I can perhaps share with our participants tonight.
Mm. So what are some of the common money mindsets that prevent women from building wealth?
Yeah, certainly. So I think one of the facts is that, oh, do I possibly need, huge lump sums to start?
Mm.
Because some of these investment vehicles at some of these companies, they'll have, let's say, a minimum of, 20,000, and someone says, oh, I don't have the 20,000 right now. Or,
Uh-huh.
does that sort of then leave me out of participating?
Yeah.
So I think the minimums is what maybe turns women off. Sometimes is maybe not understanding what it is they putting their money in and understanding those vehicles and the asset classes in finance and the jargon and the structures, which sometimes may put people off from actually participating.
Yeah.
And I think then it goes back to the point you said earlier on that it's very important that people should not be detracted from participating, but rather should seek a financial expert to help them in structuring their finances. So I think those are maybe some of the limitations, that women may be faced with.
Mm. And you mention understanding. I think one of the things that that is so important about financial empowerment is that it starts with education, financial education. It's very
Mhm.
important. And as part of National Savings Month, Prescient Investment Management is launching a free 4-week online learning program called Your Future, Your Wealth,
Mm.
beginning next week on the 7th of July. Can you tell us a little bit more about this exciting initiative and what inspired Prescient to launch it?
Yeah, no, certainly. I mean, we're pretty excited as for this campaign, which launches on the 7th of July. And essentially, it's free, as Noble Kosi has said. It's an online course, and essentially every other Tuesday we'll release a new module. The first one we have is unit trusts.
Mm-hmm.
Second one is compound interest, and sort of two other topics after that.
Yeah.
And essentially, what happens at the end of the 4 weeks. So once you complete a quiz each week, this earns you a space in the prize draw for the
Okay.
competition. The competition is open to the public. It's open to AWIF members.
Uh-huh.
And at the end of this competition, we will have two winners. And these two winners will essentially win a unit trust that is valued at 10,000 Rand from Prescient.
Wow.
Yeah, so I mean, this is an easy way for someone to open up an investment account and also the opportunity to empower themselves by going through the courses online.
Mm-hmm.
So yeah, no, we're pretty excited and we hope many people do join this initiative and join us on this journey.
Wow, that is awesome. So it's not only a free course at no cost, but also you do stand a chance to actually win 10,000 Rand, which is, I
Absolutely.
think, Yeah, that is amazing. So, who would benefit most from taking this course? And what do you hope participants will walk away with by the end of the 4 weeks?
Yeah, I mean, I think the course is essentially open to anybody and everybody. And
Mm-hmm.
I think to some of the points we spoke about tonight is essentially for people to be empowered. Once one is empowered, you're able to make better decisions. And these better decisions are ultimately helping you pave way for your future.
Yeah.
And in this way, once you know better, the next time someone comes to ask you about a financial product or what's this asset class means or this and that, you'll be in a better position to answer them because now you know a little bit more. So I think the gains are not actually twofold to this extent. There's a monetary value attached to it, but also
Yes.
ultimately something else which no one can take away from you is that financial literacy that you get. Yeah.
They say knowledge is power. So please,
Mm.
ladies on this platform, please do um, sign up for this course. If you have any questions, also please feel free to put them on the chat, and we can ask our guest to basically help us navigate this. So please feel free to type um, any questions that you may have on the chat. Let's see if there are any at the moment on the Q&A. Can we discuss a little bit about budgeting? Because, when we talk about savings, we have to talk about budgeting.
Mhm.
And it sometimes gets such a bad rep because people associate it with restrictions and, how can we reframe this budgeting conversation as a tool for empowerment rather than limitation?
Yeah, certainly. I think yeah, no, it's I think you're 100% right. So, it's for many people can be off-putting and sometimes there are people who are quite diligent and they'll have, their spreadsheets monthly that they work with. But I think now, with the use of AI that has been sort of inculcated in our lives,
Mm-hmm.
I think this potentially opens another opportunity for us to use some budgeting tools that are available. I know for one that a friend of mine lives by religiously, and essentially little things like even like a parking ticket,
Yeah.
anything that she pays for, she'll take a picture and upload it on the app. And essentially in that way, instead of going to look at, her bank account, let's say at the end of the month, she's able to hold herself accountable on a regular basis in terms of how she is spending her money and sort of
Mm-hmm.
how far she's deviating from it. So I think there are many tools that are available at our disposal now to make things a little bit more simpler for us. And I think it would be prudent for one to actually look at their budgets. We're living in very tough economical times,
Yeah.
with the cost of living being high, the electricity cost curve is going up and inflation is high. My daughter even tells me about inflation. Like when she goes shopping for her jeans, she's like,
Mm-hmm.
yo, mommy, like the denims are become more expensive now, because she has to
Wow.
spend her own money. So she's like, this inflation is dealing with me. So I think, yeah, I think there's just simpler ways for people to manage their budgets. And I think
Mm-hmm.
it's very important. Yeah.
Oh. And then we've got quite a few questions on the chat about the course. Ayanda. So the first one is from Nomdeni. She's asking if they can have more information about the course offered by Prescient and how do they register and how is it conducted and is
Okay.
it going to be recorded?
Okay, certainly. So once we launch, we will make it publicly available on the AWIF
Mm-hmm.
platforms.
Mm-hmm.
And then there'll be links that we will put on there as well for participants to participate.
Yeah.
Um, and when she said, will it be recorded? So once you complete your quiz, we will obviously record the answers on our back end. So I'm not sure if
Mm-hmm.
that's what you're asking, but you essentially do the quiz, few minutes, and your results are logged with your details, and then we have them on our side.
Mm-hmm.
I hope
Thank
you
you so
answered.
much.
Yeah.
Yeah, so Nomjeni, please do check our social platforms. We will make sure that the links are there, and also on Prescient's socials as well, on LinkedIn, and you can check also our LinkedIn social pages as well. And then the next question is from Musa. It's where do we sign up? I think we've already addressed that one. And Bridget is asking if it's online or face to face. And Ayanda has already mentioned that this is online. It's going to be offered online. And then the men are up in arms. They're saying, good evening, Nobukasi. Is it only for women or everyone? I'm also interested in the course. Please provide information. So it's Bongani and also Raymond asking.
Good question, James. I actually do not know. I do
Mhm.
not know, but what I would suggest, I think once
Just
we,
apply.
yeah, just apply. But I think also what I'll ask from our company is just to be clear in terms of who can participate when we are putting up our brochures.
Mhm.
Yeah.
Okay, so just check the socials, our social pages for more information, and all the details will be there. So I see we got an applause there from Bongani, and please keep the questions coming. Let's make this an interactive session. So back to budgeting. You said you spoke about budgeting tools that are out there that can empower us as well. What practical habits would you recommend for people who are looking to improve their financial well-being in terms of budgeting?
Yeah, certainly. So I think maybe some of the more practical and easier things is and this one is maybe for women. So don't
Mm-hmm.
make impulsive purchases. And
Yeah.
I know many of women on this platform have probably fallen victim to that. You go to Discam and you need to buy this, and that. And then next thing you are walking out with a whole trolley. So
Mm,
manage impulsive buying. I think
mm-hmm.
maybe another practical tool would essentially be try and reduce, if you've got debts, maybe start off with your smaller debts.
Yeah.
Try to get rid of those, and then you will have a little bit more disposable income, and then you'll be able to tackle off the bigger debts. Because I know if you've got small debts and big debts, it can be, quite overwhelming. So start with the small things first. I think maybe other more practical things. Living in the city, we often all go and dine out, but all of these
Yeah.
things add up. So manage how often you are, going out. Rather, this can be sort of quite costly.
Mm-hmm.
Um, but I think another thing I would suggest in managing budgets is that please can people make sure that they have an emergency fund, because emergencies will come, and having to deal with some of those from your salary will put you under pressure. But if you've got a planned emergency fund to deal with that, it will also help you.
Mm. Let's talk about, you mentioned it earlier, but let's go there. Black tax.
Mm.
How does one manage the black tax issue?
Yeah, I think this is quite a difficult one. And I think it may differ from people to people. I mean, some individuals will choose not to be part of it, but those with a little bit more empathy and heart,
Yeah.
they almost can't avoid it. But I think essentially what one can try and do is try build systems around the people that you are assisting.
Mm,
So if you're sending them 2,000 Rand every month, um, try see what can be done back home that can generate them that 2,000 as opposed to it coming from you each and every month. Um, because otherwise then it won't end, So
mm,
it's empowering those individuals to make better choices so that they too can have things that are rather income generating than you being the bank for them.
mm.
Yeah.
Yeah, and these things can be generational if we do not empower each other as families,
Mm,
and and then it just becomes a vicious cycle.
100%.
Yeah. And
100%.
Lerato in the chat says, what books or podcasts are you currently listening to that can help a young professional kickstart their way to saving and investing?
Oh my goodness. Thank you for that question, Narato. Um, Stephen Bartlett's podcast. Just want to get the name for you quickly. Um, it's been a game changer for me. The Diary of a CEO. That's the name of the podcast.
Mm-hmm.
Um, this gentleman is just so progressive. He will have individuals from, various industries or sectors or the like.
Mm-hmm.
And he's also, quite financially savvy and sort of a steward of managing finances better. So that for me is like my go-to podcast. Absolutely love it. I started it about a year ago, and literally everyone I've introduced to it is just like, thank you, Ayanda.
Wow. I'll be sure to check it out as well.
Yeah, no, it's good.
Yeah. And then Nomden is asking how much is a reasonable amount for an emergency fund? The final amount, not the monthly contributions.
The final amount.
Yeah.
Yeah, so I'd say for an emergency fund, I would say if you can have, let's say, 3 months of your salary,
Okay.
would be sort of a reasonable measure of an emergency fund.
Okay. There you have it. So your monthly salary is in your take home or your
Yeah,
gross.
yeah. I can say your take home times three.
Okay.
Yeah.
And then let's talk about myths, misconceptions about investing. What would you say is the biggest one? If you could debunk just one myth about saving or investing tonight, what would that be?
A myth
Hmm.
that you'll lose your money and that everyone doesn't know what they're doing.
Yeah, yeah.
Um,
There's
I
a
mean,
trust issue sometimes when we're investing, but I mean, with our robust and I think we have one of the best regulatory systems,
100%.
in the world that make sure that they protect us as investors.
100%.
Mm-hmm.
Yeah, I mean, I think I 100% want to agree with you. These institutions like the FSCA, they hold a lot of these registered financial entities to account. So to the extent that people, I mean, if you're looking at some of our grandparents, for example, when um, cell phone banking came into the picture, no one wanted to use cell phone banking. The older people, they're like, yo,
Yeah.
the scamsters will take my money.
Mm-hmm.
But I mean, to that extent, these institutions, there's a lot of trust that has been built over time. I think people must not fear anymore
Mm-hmm.
about getting into the market. I think it's imperative that people get into the market. But I think maybe it's not a myth or something I debunk, but I think for me over time, many people have been accustomed to say, go and buy a house or go and buy a property.
Yeah.
But bricks and mortar, right?
Mm-hmm.
Um, but I also think, you know, there's a lot of other alternatives to just bricks and mortar. There's property REITs that people can still get exposure into the property asset class. So I don't
Mm-hmm.
want people to be limited in their thinking because bricks and mortar comes with a lot of added responsibilities. You know,
Yes.
there's rates, there's maintenance, there's
The angry tenants.
yes, do you know what I mean? The
Yeah.
list is endless. So I think people must just almost debunk some of those sort of old things. Well, you have to do this, but there's so many other alternatives when it comes to investing in the opportunities that are out there.
Mm-hmm. So many ways to get into different asset classes. As you mentioned, that property for one, you don't have to actually have, title deeds, go get a bond at the
Mhm.
bank. There are different ways of investing in property. And many other asset classes. There are different ways, and I think access has opened up now more than ever. And so there's just a plethora. I think the biggest thing, and it's something that I guess we also saying here for today, this webinar is strictly for information purposes. Please don't take it
Mm.
as financial advice. It is advisable to go and get someone who can actually look at your unique personal circumstances and then help you to plan your way financially.
Absolutely.
So if every woman joining us and men, sorry guys, if every woman and man joining us tonight remember just one thing, what is the one action you would encourage everyone to take this week to improve their financial future?
One step.
Yeah, just one thing for them to remember from this conversation this evening.
Oh, I think I mean, yeah, absolutely, guys. Be agents of your lives. No one is coming to save you.
Mm-hmm.
Um, Literally, if you haven't started, start now. We have seen that we are living in times that have changed, unprecedented times.
Yeah.
You need to save for the unforeseen, and you need to be diversified in your approach. So if you want to have your property, have your property. If you need to have that emergency fund for the short checks that may happen, you need to have a retirement savings account for the future. So I think, we need to think a little bit more holistically around and our lives,
Mm-hmm.
and to think that you still have the time, you don't have the time. It's like start now, like don't delay it. Be prudent in your spending.
Yeah.
Be prudent in your spending. My dad always used to tell me, Ayanda, just live below your means. Like
Mm.
simplify your life. Um, I used to have a German car. Um, and then over time, and I think we've all seen the cost of these cars nowadays. And then I said, you know what? I don't want to be paying X amount for this German car, which is costing me so much money. I then went and got myself a Japanese car, for example. So I'm paying a little bit less.
Yeah.
And why am I paying that less? So that I can have a little bit more disposable income for me. That disposable income gives me a lot more freedom to do other things that I need to do in my life, some of which are putting money away for future education for my daughter. I mean, I wanted to go into the best institutions, in the world.
Mm,
And so I need to save for that, and I need the time to save for that, and I need to up my premiums in order to get to the value that I'll need in a few years' time. So I would say, guys, ultimately simplify your lives. Don't worry about what the next person thinks about you. They actually probably don't really care, but they'll talk about you. But honestly, focus on your journey, be
yeah.
intentional, and simplify your life.
Yeah, that was one thing I was going to ask to say when people saw you downgrading the car and making all those decisions, of course, people will talk. How did you deal with the because there is the social aspect as well, social pressures to say, oh,
Mm,
things are not well there. She's even sold her car. Did you see what she's driving now?
mm. Yeah, absolutely. I mean, I think even maybe 2 weeks ago, they're like, I was walking with a client towards my car, and they were like, "Yo, is this your car?" They're like, "Yo, this car does not look like you." And luckily for me, I've got a lot of skin, thick skin, so a lot of
Hmm.
these things sort of bounce off me. And my cousins used to laugh at me, but I'm okay. You're right. There are those pressures by you are in such and such a position. You should drive such and such a car.
Mm,
But I've got a plan. I know my journey, and ultimately that's the focus.
yeah,
Yeah. So I think if there's one thing I can maybe just leave with the guys tonight, I mean, in all honesty, guys, no one else is living your life.
yeah.
Do what feels comfortable for you. And trust me,
Mm,
the good habits that you build from today onwards will ultimately benefit you going forward.
yeah, that is so powerful. That is so powerful. And there's a question online that says, what's your take on saving vehicles like stokvels? And how would you do them differently compared to the way our parents and grandmothers did them? Because I've always viewed stokvels as okay, it's a great way, discipline to save, but the risk versus the return. It's not agreeing with what I learned at varsity regarding investments and savings to say there's a risk of default there from people contributing to the stokvel and we are putting all our money in this. So what is the best way, or let me not say best way, but what is a more modern way of approaching stokvels?
Mm. Yeah, look, I think stokvels are another good way of saving money. Because I think obviously the getting onto them is little bit easier. There's no needing of forms and
Yeah.
documentation that needs to be screen checked. And I think ways in which they can be, and I think sometimes having that level of accountability where if I haven't paid, the rest of the members are going to be frowning on me, or I'm going to have a black mark to myself. I think
Yes.
maybe some people need that added pressure in order to start these saving habits. I think one way in which we can maybe sort of take it up a level up nowadays is maybe to say, okay, guys, we are saving this money, but how about we maybe at the end of the year, we've accumulated X amount. How
Mm-hmm.
about we maybe buy a timeshare? Somewhere where essentially in this timeshare, for let's say a timeshare in Sun City, all of us
Mm.
in the Stockfall at some point in the year, we can go have a weekend at that timeshare apartment. So perhaps using the Stockfall money
Mm-hmm.
in getting assets for the people in the Stockfall. I would say maybe some of the considerations that people can start to think of as opposed to dispersing that money at the end of each year. How about
Yeah.
we keep reinvesting it, let it compound over time, And essentially, once we get to an X amount, we can then be able to potentially invest it into vehicles and assets that can be income generating for the members of the stokvel.
Wow, Ayanda, can I join your friend group?
You are welcome.
I love that take. I love that take. So let's elevate it. I mean, the stokvels have been around. Our grandmothers did it in a certain way. Our mothers. Now let's take it up a notch. And we can still do them, but in a more modern way. Godfrey says risk, bravery, and confidence in the journey you're about to embark on. Go ahead and do that. Thank you for that comment. And then there's another question about the socials. So please do check the AWIF socials and also check the Prescient social pages. You will get the information on the courses. Yeah. So thank you so much, Ayanda, for this time. I think you shared so many insights and practical advice with us this evening. And you've reminded us that wealth isn't something that we build overnight, and financial freedom is not reserved for the select few. And I think for me, my biggest takeaway was that we all define wealth differently, and it can look different for each and every one of us. But I think the common thread is that it's built through intentional decisions, consistent habits, and having the confidence to simply start. You said just start small, but just start. I think that is the important thing. So that is really a takeaway for me. And to everyone who joined us tonight, I just want to thank you for spending this time with us. We encourage you to continue your learning journey by registering for the Prescient Investment Management course. It's called Your Future, Your Wealth online, and it launches next week on the 7th of July. Please just check the socials. LinkedIn, our LinkedIn page will definitely have that information, and also Prescient as well. Prescient Investment Management will also have that information. Before I close off, let me just see. We've got a question here from our chairperson, actually, at AWIF from Bali. It says, Ayanda's last words, putting short. So that's derivative speak there.
Oh, my last words.
Yes.
No, I mean, thanks, Mbali. I think parting shots for tonight, to the audience. I would say, guys, build a strong reliance on yourself and taking agency for building your financial wealth. Because in this journey, once you do win and once you reach those objectives, it's the journey is much more sweeter when you know that you are 100% accountable for this, and it's not because as a result of somebody else. So I think those would be my parting shots. It's doable. As I said, start now. It's never too late, but if you do start late, just know that you're gonna have to put a little bit more into it. Yeah. Thank you, Maddie, for
Okay.
that question.
All right. Thank you so much. Thank you so much, everybody, for joining us this evening, and have a great evening. Please stay warm and remember to do your well and do it your way.
Thanks, Nobu. Thank you
Thanks.
so much.
Bye.
Cheers.